Welcome back. Well, those of you watching the stock market may have noticed we've seen quite a bit of strength lately. So I think it might be helpful to revisit the VIX, the Volatility Index, because as the stock market, in this case, the S&P 500 has been quite strong, the VIX has gone down a lot, and this may mean something. Now, the VIX, again, it's known as the Volatility Index. It's an index that's produced by the Chicago Board Option Exchange. It measures the front month premiums on the S&P 500 options. It's known as the fear index. When stocks go down, the VIX goes up because traders and investors will use options to hedge their bets. But when the stock market's strong, the VIX goes down. A level of 13 is actually quite low. In addition to the VIX being quite low, we also should make note of the daily point change, and it's been very, very quiet. The red line here is the S&P 500. We're above the 4,500 level lately, and we can see this is a daily point change, and there literally has been almost no change, less than 1 point change over the past couple days on a day-to-day basis. Now, in the past, we've seen the VIX go up and down 2 or 3 points. That means something else. But the fact that the VIX has been so quiet also means something. This chart goes back to February of this year. The red line, the S&P 500, we can see as stocks went higher, June, July of this year, the VIX, the point change got very small. Now, of course, the VIX goes down, but in addition to going down, it also gets very, very quiet. Conversely, in September, early October of this year, when the stock market went down a lot, take a look at the difference in the point change. The VIX was up 2 points, 2.5 points a day, down 2 points a day. So it's not only important the direction of the VIX. When the stock market goes up, the VIX goes down, and vice versa, but also it shows us the volatility. Lately, the VIX has been very, very quiet, almost not moving at all. It shows us a tremendous amount of complacency in the market, that traders are not looking to jump in and out of the VIX. They're not really questioning it. A lot of people have a lot of confidence in this rally. Historically, what does the VIX look like? Well, take a look back to 2018, specifically in the June area. Take a look at how quiet the VIX was when the S&P 500 went from 2,700 to 2,800 in a rather short amount of time. Take a look at 2019, April, when the VIX was less than up or down 1 point for several weeks at a time. And that's when the S&P 500 went from 28 to over 29, 29.50. Take a look to see in 2020. Now, of course, we had that huge stock market sell off early on March of 2020 due to the COVID crisis. But after that, as a result of low interest rates and a lot of government spending, we saw a very strong stock market. S&P 500 between May, June until August or so, S&P 500 went from 3,000 to 3,600. The VIX hardly moved at all. You see, again, when the VIX goes down, it shows us that traders are not buying the VIX. They're confident in the stock market. They're not using options as much. But when the market's shaky, even though it goes up, traders may still jump into the VIX to buy it as a hedge, expecting the market to go down. But when the VIX doesn't move at all, it means there's broad-based complacency. A lot of traders are very comfortable with the trend, which is kind of what it looks like now. Now here we see here, these are the daily point changes of more than 5 points. That's the white histogram bar. The red line is the S&P 500. So we see obviously during the COVID crisis, February, March of 2020, the VIX was up 5 points a day in several situations. And even when the market moved higher, notice these blips as the stock market, went down, but eventually did recover. We're talking about September of 2020, March of 2021, even as late as March of 22, and then September of this year, the VIX spent some days moving up more than 5 points in a day. That's the daily change. That's not the VIX reading. That's the fact that the VIX went up 5 points in one day. Well, This shows us now this lack of movement from really September of last year through present day. We know we had the weak stock market, but that whole time the S&P 500 went down lately, September, October of this year. The VIX never went up 5 points in one day, and it really shows us that despite weakness, there was a tremendous amount of confidence or complacency, we may say. Now here we see the white line, that's the S&P 500. The red line is a 20 simple moving average. The yellow line is a 90-day simple moving average. When the red line, the short-term moving average, is above the long-term, it shows us a strong trend to the upside. Conversely, when the 20 is below the 90, it shows a trend to the downside. But now we have a huge crossover. The white line, the S&P 500, has crossed back above both moving averages, really showing us on a daily chart, which this is, a big reversal back to the upside. And the last time we saw the S&P 500 above both moving averages, we have to go back to August of this year, and that's when the S&P 500, was certainly a lot higher in the 4,500 level. And notice where the VIX was. The VIX was at the 14 level, even a little bit below that, which is where we are now. So VIX below 15, and 15 is actually the very big important number. When you have VIX below 15, it shows the market's confident and it's moving higher. We would not be surprised to see the 20 simple moving average, maybe like last time, cross back above the 90. Now, here is where we are right now. The VIX closed for the day 1380. This is also the same price as last week where it closed. Now we were at the 14 level, but still, we see S&P 500 is moving higher. Keep this in mind. If we see the VIX continue to stay below 15, that really is assurance that the stock market is on track to move to higher highs. At least historically, that's what the data shows us. And the weekly point change, well, when the VIX doesn't move a lot, what does that mean moving forward? How can we expect the market to behave moving forward? Well, the red histogram bar shows a 7-day forward return. The blue histogram bar shows a 30-day, and the green 90-day. The x-axis over here shows us the daily point change. So right now we know the VIX is very quiet. 0, -1, +1, but very close to the center. When we see historically, and this goes back, several decades of data, historically, when we see the VIX at this situation where we are now, unchanged for the day, very, very small percentage moves or point moves, this really is not conducive for very good stock market returns. When we see the VIX go down a lot or even up a lot, it shows us moving forward that we tend to expect better returns. For example, if we saw the VIX go down, and these are weekly point changes, by the way. If the VIX is, let's say, down 10 points in 1 week, historically speaking, over the next 90 days, we can expect the S&P 500 to give us a 10% return. If we see the VIX down 13, 14 points in 1 week, historically speaking, the S&P 500 may go up 20% in the next 90 days. Now, of course, that's not very often. The VIX going down 14 points in one week. That's actually a stock market crash type of situation. But also when the VIX goes up a lot, it means that maybe, with the stock market going down as the VIX is going up, maybe that will also return or, translate into, better returns. Point being, the inferior returns we see in the stock market are usually when we see the VIX very, very quiet, which is where we are now. Doesn't mean the stock market can't continue to go up. But the fact of the matter is, very quiet markets usually lead to very quiet markets. Now, finally, we see here the red line is the S&P 500. The blue histogram bars show us a VIX level below 15. So every day that the VIX is below 15, we get a blue bar. Notice how the red line, the S&P 500, behaved when we had continuous streaks of VIX below 15. You had S&P 500 March of 2016 go from 2,000 up to 2,800 March of 2018. You had a 2-year rally. And if we were in that rally and we said, okay, I'm going to hold on to my position as long as the VIX, for the most part, stays below 15, we would have been able to stay in a very nice trend. Again, this trend began, this is probably mid 2018. S&P 500's 2,500 went up to 2,800 in several months. Then we saw a streak of 2019. Obviously, the COVID crash took all of that away. But now we see once again, starting back probably mid-time this year, we saw the VIX below 15 for quite a long period of time. Well, we're back below 15 now, and actually very recently. Does this mean moving forward that the stock market's going to make new highs? Absolutely not. This is historical data, and we lean on the historical data to try to identify the tendencies moving forward. And there's certain, facts that we can extrapolate from this. When the VIX is below 15, number one, it tends to equate to strong, trendy, quiet markets, which is where we are now. But that's also helpful because if we see the VIX pop above 15, well, that shows us, well, maybe we should be a little bit cautious, reevaluate our portfolio, maybe, evaluate the risk, take a little bit of risk off the portfolio. If it crosses below 15, it's not a guarantee the market's going to crash, but it's a warning sign. And number two takeaway, when the VIX is very quiet, when it goes up or down a point a day, less than a point a day, and especially on a weekly basis when it's very quiet, this also shows us very quiet markets. Now, very quiet markets can last for a long time too. So the fact that the market's complacent is not necessarily a bad thing. We had very quiet markets, very quiet VIX readings for 2 years, and the VIX went up 1,000, or I should say, the S&P 500 went up 1,000 points during that time. So very quiet markets are good markets. But if we start to see the VIX, number one, cross above 15, and number two, start to have big daily moves, up 2 points, up 3 points in one day, that should be a warning sign. But so far, that's not what the VIX is telling us. The VIX is telling us slow and steady. But we're going to continue to revisit this, and we certainly will update you with any big changes along the way. We hope this has been helpful. We look forward to seeing you back soon.